Yo, what's up guys? It's your boy Looney. Today I'm breaking down exactly how you can build monthly passive income by selling options, even if you only have $1,000. I'm going to show you the real math so there's no hype and no guessing. Before we get into this video, quick shout out to the Discord. It is free to join. And then I also offer a premium membership that's $8 a month. And that gives you access to one-on-one coaching, trade call outs. I have an option selling course, giveaways, and more. You can check it out. All the links to that are in the description. But let's look at the basics and let's pull up a stock and cash secured put strategy that I have open right now. I have Oscar Health. Is it a good time to sell a put? Probably not the best time right now, but you could still do it with low capital. Selling options is great because you get paid up front for taking on a obligation. So when you sell a cash secured put, you agree to buy a stock at whatever strike price, at a certain price, and you get paid for that promise. On the other hand, with covered calls, you agree to sell your shares at a certain price. Again, you get paid up front. So with $1,000, you're not looking at big stocks like Tesla or Apple. You're looking at lower price stocks that are generally more volatile. So somewhere anywhere between $10 to $15. Anything below $10 is a little bit more risky. You can go slightly below that. I'll show you one after this one that I have going on that is under $1,000. But this trades that I have here is slightly above that $1,000 mark. But you need enough to be able to afford 100 shares of whatever stock you're doing. So let's look at one example. I have this $12 put. Let's actually look at a cheaper one. So this $11.5 put. And 11.5, so I need $1,150 to do this trade. And Oscar, which was getting a lot of talk because of all the backlash it was getting from the healthcare industry being hurt, and it was down pretty significant. And I took advantage of this. And that's really when you want to be selling puts. You want to be selling puts at discounted prices. So if I go to this advanced chart, you don't need to time this perfectly, but ideally you'd like to have the Bollinger Bands set up. You could do that on Robinhood or whatever you're using, Bollinger Bands, and you want the stock to be trading towards the lower end of the Bollinger Bands, those blue lines. Now, you're not going to get that every time. That's in a perfect scenario, but ideally you'd want to be trading when the stock is close to that. You can do it whenever, but that is probably the best setup. And that's what I did. I was waiting for that drop or that confirmation. And when it did, I sold a $11.5 put. And to do this trade, I opened it on August 5th. So pretty recently. And it expires the 5th of September. So about 30 days. And to do this agreement, for having my cash locked up and being ready to buy this stock, I'm essentially saying I am okay with owning Oscar at 11.5. And a lot of people say that, but they don't truly mean it. And that's because when the stock starts dropping and dropping, there's a lot of panic or fear. So you need to be super comfortable with purchasing or confident in the stock. And you need to be confident with the price you chose. So I'm very confident. If Oscar goes to $11.5, I'm okay with owning those shares because I feel at that price, it is very discounted and on sale. And to do this trade, I got paid what's called a premium. So that $47 I got paid upfront goes into my buying power, and you could do whatever you want with that. You could do another cash secured put with it. You can put it into an ETF or crypto, whatever you want to do. That $47 is yours upfront, but you don't realize that gain until this option expires. So ideally, you want the stock to be above this strike price, and then you have a realized gain of that $45. You get your $1,000 back, and you can do a similar trade or a different trade, whatever you want to do. But you get that money, that cash back, that $1,000 back, and then you'll realize that gain of $47. But if you were to close it right away, you wouldn't make any money. You probably lose a little bit just from opening and closing a trade. But as of now, if I were to close this trade, I would still be profitable, but I wouldn't realize that gain of $37. And very similar with covered calls, you need to own the shares this time, and you need to have 100 shares, which I do. So I have 100 shares of Oscar, and I sold a covered call. And very similar, I got paid up front $33, and if the stock goes above $18, then I'll be forced to sell it on the expiration date. So you can make money both ways, both directions, and that's really just the wheel strategy, and just selling options can be so powerful. But let's look at the math and go over everything, because let's look at a different stock or ETF. This is a Tesla leverage position, and I only do this when it is super undervalued. Again, I have notifications set up so that I get notified if it does reach what I want to see. I want to see it get close to the lower Bollinger Band, and that's kind of when I want to start trading this ETF. And that's exactly what I did. So I waited a little bit, and I decided to sell a $9 put. So $9 put, you only need $900. And to do this trade, I got $34. So pretty good return, around that 4%, a little less than 4%. But if you could do this consistently, you're earning $30 per contract, and you get that 4% return, you can get a 36% annualized return, or somewhere close to that, maybe more or slightly less. But 36% is a phenomenal return in a year. And I can confirm this because I'm just about that. So at my 1 year, I have around 40% past year. Year to date, slightly down, well, not down, but underperforming of what I'd like to see at 13.5%, which is still really good. We're almost halfway through the year. And if I'm over 10%, that's really good. If I'm at 20%, that's phenomenal. But in the past year, I'm up 38%, and I'm selling options. So it's pretty good with the risk versus strategy. So let's look at actually the risk of doing this. So your risk is the stock dropping. I sort of touched on that. This one is a leverage position, so this one's very volatile, and you need to be okay with positions you don't mind owning. I can't stress that enough, because a lot of people say they want to buy low, but when things actually get low, they sort of panic, and that's where the panic selling comes in. So you should really stick with what you think is stable or liquid tickers, and just avoid those penny stocks. I know NIO is one of those that I used to trade, and it's slightly cheap, but something like that is something I would stay away from, just because these stocks aren't good companies, or they're not as good companies as other stocks. And that's just plain and simple. And yes, you can make more money with these cheaper stocks, but is it really worth the risk? I personally don't think so. And another thing you can do to actually have control of your sort of risk tolerance is choosing delta. So you want to be using low delta, anywhere between that 0.15 to 0.25. If we go back to this Tesla position, I did it really low delta, and now it's at 0.08. You want delta to go down as time goes on. But when I first opened this trade, I chose a delta that was really low. If you were to set up another one, you'd want to be choosing one that's around that 20 delta, that 10.5, maybe a little less, that $10 put. If you're first starting off, if you're a beginner, I would definitely stick with lower options just to get that repetition in and understand things. As you move up and have more money, perhaps you can do higher deltas and do a little bit more risk. I personally like the 0.15 to 0.25. I think that's the great range of risk and return with delta. So really start with one contract, focus on that consistency, and don't swing for huge returns. So with $1,000, you won't retire tomorrow, but you could build consistent passive income and compound it. That is very important, is compounding it. Sell cash secured puts, roll it into covered calls, and keep the cycle going. You want those small, steady wins, which can beat those risky home runs over a long period of time. And if you want to see real life examples and where I show my own trades live, drop a comment and join the premium Discord. Until next time, peace.